Hey, what's going on, everybody? So today I wanted to update my previous video. So basically in the last video I said, look, Bitcoin has a couple different options it can do. And one of the big options that I was suggesting is a backtest. So let me just show you real quick what I was talking about. So basically I said, look, we broke out of this big range in here. Well, actually it wasn't too big of a range, but it was a nice size little range, right? So we marked up in price right here, right? We started ranging and we broke out. So when we broke out, we started pulling back. I said, look, there's a couple different ways this can happen. Option number one, the bullish option, right? We come down and we back test the breakout area, right? This is the resistance area. So we break out, we come down, we back test the resistance area. So this whole thing was resistance. We break out and now we come down, we back test the resistance to what? To what? To make it the new support. So that's why I was saying, look, it's important for Bitcoin not to just go up, 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 because then it's unstable and it collapses. What's important is Bitcoin to break out, any asset to break out. You're basically in outer space, right? This is outer space. And you need to come back down to catch your breath, right? So you come down, you back test, and basically I said, look, if you come down and we get a reaction, we come off, that means the back test is confirmed. So we want to really wait till the end of the week, right? So if we look at the weekly chart, it's still very early to tell what's happening. But right now, the weekly candle is trading above the previous weekly candle, which is good. We see the tail end of this weekly candle is somewhat of a bullish, I guess you would say, hammer candle, right? So basically it got rejected. The sellers got rejected, right? So and buyers came up and basically supported the backtest area, which is a good sign to see. So now what, right? Well, going back to my previous video, I said, look, if price fails to hold above this area, we come down, then we retest this area as resistance right here, then it would make more sense for us to have a bigger correction. And I was actually sort of leaning towards this somewhat slightly, and the reason is this right here. I'll show you. So this was the big range. Let me take everything off the screen. This was the big range that Bitcoin was in right here. This range right here. Right? So one of the ideas in the previous video was suggesting that we need to come down to backtest this big monster range. I mean, look at this thing, right? We marked up in price, we came up, and we sort of oscillated in this giant range. And I looked at this as a YOFF accumulation range, right? And YOFF accumulation range is you have this first, think of it like an M with a slanted leg, right? So you have an M with a slanted leg, right? So this is your first test. This is your second. This is your third. And then you go into your spring phase, right? You're going into your spring phase. You grab the liquidity. See that little candle sticking out there at the very end? That was a liquidity grab. You grab the liquidity, and then what do? Everybody, right? When you break below, right? When you break below the range, everybody says, okay, we're going down. We broke below, so that we broke this low, so that means we got to go down, right? But what it's doing is it's setting up a market maker special, like I like to call it. Basically, what that means is if the market makers, right? The guys who have $10 million, right? Let's say you have $10 million. You can't just buy Bitcoin right here, or right here, or right here, or right here, or right here. Why? Because there's not enough liquidity, right? So how do you, if you have $10 million and you want to buy Bitcoin, how do you do it? How do you do it? You can't just go to Coinbase and say, Coinbase, I want $10 million worth of Bitcoin and I want it now. It doesn't work that way. Why? Because there's not enough Bitcoin for that to happen. So what do you need? You need liquidity. And how do you get liquidity? How do you get liquidity? Well, you need retail to pour in liquidity so that Bitcoin can absorb it, so that the market maker guy, the guys who have most of the money, can absorb it. And how do they do that? You need to break a certain support or resistance, right? So for example, if we're ranging in here, right, we're going to the resistance, going down to support, up to resistance, going down to support. But look, you can see we broke the support. Let me put it exactly to the body, right? This is the most important candle in this range, is right here. Because when we broke this range with this big red candle going below the range, and we closed the candle below the range, that told every retail trader, that told everybody on the planet, look, we just closed below the range, which means you must go short. You must sell. Why? Because we broke the range. We broke support. So common sense says, look, if you break support, you have to go short. You break support, you have to go short, right? That is the mentality, that is the psychology, that is everything in regards to how people think. And the market maker, the guy with $10 million, understands that. He understands that brilliantly. So he capitalizes on that, right? So when this candle broke to the downside, retail went short. They sold, short, leverage. And when what happens? You have an influx of liquidity. You have millions and millions and millions, maybe even actually billions of dollars, right? You have billions of dollars pouring into the market, right? Pouring into the market. And then what happens? The guy with $10 million says, perfect. Now I have the liquidity. Now I can place my order. So what does he do? He goes right down here and he hits buy. I want 10 million. I'm just using it as an example, $10 million. I'm just using that as an example. But $10 million, right? Multiplied by how many people who are whales? How many whales are out there? There's so many whales. I mean, there's a lot. There's a lot of people who have millions of dollars who are playing this game, right? And they all identified this candle right here. And they identified it as what? The spring. The YOFF accumulation spring. Which then what? Told them, hey, retail's going short. There's an influx of liquidity, which means I, the market maker, the guy with millions and millions and millions of dollars, I'm going to buy. And what happens? What happens? This happens. Look at that right there. That's what happens. Boom. And everybody who went short right here got liquidated. And all that liquidated money went to who? The guy with $10 million. That guy with $10 million. And why? Because the guy has $10 million. Because people with a lot of money have an edge over people who don't. And it's sad, right? It's very sad. That's why they are rich, and that's why they continue to get more and more and more rich, right? You've heard of the expression, the rich get richer and the poor stay the same. That's true, right? And there's even a thing out there where it says, look, if you took all the money in the world and you divided it evenly amongst every soul on this planet, eventually eventually all that money will go back to the rich people. All the money will go back to the multimillionaires and the billionaires. Why? Because they know how to play the game. And when you have a lot of money and you know how to play the game, you can rig it in your favor. And that's why retail cries, manipulation, manipulation. They are, in fact, it's true to a certain extent. But at the same time, there's no reason to complain about it, right? So what do? You stack your pennies next to their dollars. That's what I'm doing. I'm a hodler. I don't care about price dumping or doing whatever, because I look at, if the price goes up, I look at it as a blessing. If the price goes down, I look at it as a different type of blessing, right? So basically what I'm saying is this candle right here was the most important candle, because it basically said, look, if we are going to in fact go down, then hey, that's a good question. So here we go. So what if this was a legitimate breakout? You say, Brandon, how do I know if it was a real breakdown? How do I know if it was a market maker special, right? Okay, that's a great question. So first of all, I'll take everything off the screen right here, and I'm going to show you the trick. I'm going to show you the trick. So I'm going to put the line right here, and I'm going to get to the price in a minute. I'm going to get to the price, and I'm going to get to why the previous video and the ideas that I shared in there, and why they could still potentially be valid. But first, this is a lesson. And this is a very important lesson. And this is what the millionaires and the billionaires and the people who play this game don't want you to know. They don't want you to understand this part. So here's your range right here. I'm actually going to put that right there. Right? And you can see both sides of the coin here. So let's start from the very beginning. I'm going to do this very methodically. So price comes all the way up. We slam into resistance. So what does retail do? They draw their line at the resistance. Perfect. Fine. Fair enough. Price comes all the way down and it reverses. What does retail do? They put their line at support. Okay, so now we have identified right here, this is resistance and this is support. Okay, so now, right now, price goes all the way up and it breaks this support. It breaks it. It breaks the resistance, right? But then look what happened. It didn't go up. Why? Why didn't it go up? Because, again, the multimillionaires, the people with $10 million, they needed to, they're playing the range. That's what they call it. They play the range, right? So when price breaks up, retail buys in, and then they short it. And then it comes all the way down. Right? All the way down. And retail's like, well, what the heck happened? Everything I was taught is wrong because we broke out, but we didn't have any follow through. And I'm going to get to the reason why. And I'm going to get to why you need to wait for confirmation. And I'm going to show you the confirmation. So price comes all the way down and it breaks this line right here. It breaks below the resistance or the support. It breaks below support. So retail says, okay, I'm going to do it again. I'm going to short this time. And then what happens? It goes back up. So what was the problem, right? Why did retail lose in this situation? Well, number one, it's a YOFF accumulation, right? So this is YOFF accumulation, and it's basically a tool that we can use, right? Common people like me and yourself. Maybe you're not common. Maybe you have millions of dollars as well. I'm a common guy. I don't have a lot of money, but I'm trying to create as much wealth as I possibly can to hand it down to my son. Maybe I might have another one soon, right? But at the end of the day, we're all learning. This is a learning process. I haven't been doing this for 20 years. I haven't been doing this for 10 years. I've been doing this probably since 2018, right? So I don't consider myself a master at no means, not even close, right? I can name 5 people off the top of my head that are 10 times better than me in identifying and trading and things like that. But I come from a perspective from a beginner, and I like to give a different type of take on analysis in the eyes of a beginner, right? So I would think most people out there are beginners in some way, even if you've been trading for many years, or even if you don't trade, you're just a hodler, you just like to look at charts and understand where the price is going. That was me, right? I didn't really necessarily trade. I just wanted to identify, when's a good time to dollar cost average, when could we potentially reverse, like for example, if I got a paycheck, right? And I had an extra $300 to spend on crypto, right? Do I want to buy it today, or maybe I should wait next week? So I'm going to watch one of these chart guys on YouTube to figure out when a better time to buy, right? Now, granted, you don't want to do that per se, because, nobody's allowed to give financial advice unless they have a real license. And this channel by far is not financial advice. I am not a financial advisor. You should not take any advice I say. This is just all for entertainment purposes only. You have to say that. You have to say that because it's true. It's true. I could be totally wrong. I could be dead wrong. And I don't want anyone to make a mistake based off what I say. So, but I'm giving you ideas of how to sort of perceive what we're seeing. And, I'm not been trading, like I said, for 10, 20 years, but at the same time, I have a beginner's lens. So when I first started learning charts, I thought to myself, how can I teach my older self, right? So I've been in here since 2017, 2018, understanding charts, and not just on and off. I mean, religiously. I've been doing this every day for the last several years. And this is my passion. This is what I like to do. So I'm thinking, okay, how can I teach my younger self the mistakes of what not to do? Because I was that person that sold right here thinking, okay, we closed below, so we should go down, right? I was that person, and I still make those mistakes. Even though I can identify and I can see it, I still make plenty of mistakes, and everybody makes mistakes. And that's the whole point, right? We have to learn from our mistakes. When you lose money and you feel that, it's a very nauseated, painful feeling. I'm sure every one of you has lost some type of money in some type of trade or some type of scam or something that was a false reality or whatever. And you felt it and you closed your fists and you said, that's never going to happen again. That's never going to happen again. Now, hodling is different, right? If you buy, let's say you buy Ethereum, right? At whatever, let's say you buy it at $1,000 and then it goes down to $800. That's a little different because that's unrealized gains, right? Those are not realized profits. You didn't hit sell and then lost it. I'm talking about someone who made a trade, they lost money on that trade, and they felt the pain. Either they got liquidated, which, by the way, if you're a new trader, I definitely don't recommend using leverage. I know it's fun and you get the thrill of it, but that's not why you should be trading in the first place. I highly recommend not doing that. Also, I can't recommend anything because I'm not a financial advisor. But if I had to recommend to my my past self, right, my younger self, I would have said, hey, use spot, don't use leverage. So basically, this YouTube channel is to basically teach my younger self what to do and what not to do, if that makes sense. Not from a masterclass professional 20-year experience level, but from sort of a beginner slash intermediary level. So going back to Bitcoin, sorry I ranted, but I had to say it. I had to say it so that you can understand the context of what I'm saying. So I'm going to take this line off and I'm just going to focus on this right here. So the candle broke down, right? And that was your spring and the big guys bought. We know that. But what if the candle continued going, right? If you want to sell, that's fine, but you need to wait for confirmation. And what is confirmation? Is what I always talk about is the back test. You got to have, you can call it a retest, a back test, whatever. It's all the same. So a back test is this right here. This is the big part. Price is coming down, right? It's coming down, and then it sits right there, and you're like, okay, boom, we break below, and you go short. No, that's not what you do. You wait. Well, if you wait, you can think to yourself, well, it's just going to keep going, and then I would have missed my opportunity. The problem with that is, look how far it came. It came all the way up here, and it fell all the way down, right? So typically, you need some type of retracement before coming down a lot further. If price just goes all the way from the top of the range all the way to the bottom, price breaks below, you want to wait for price to come back up to retest, backtest the previous support. When price comes down, it comes back up. It retests it as what? Not support anymore, but it retests it as resistance. So right here, it was support. It broke below the support. Right? Now it's broken, but instead of selling it or shorting it, you want to wait until it comes back up to retest it as the new resistance. That is the key. That is by far the number one thing that I wish I learned when I was starting out is you have to wait for confirmation. And most retail traders are not patient. See, like I go back to the quote that I really love from Warren Buffett. And I don't know how you feel about the guy. It doesn't matter. But he's rich and he knows what he's doing. So he says, the stock market is a device that transfers money from the impatient to the patient. The stock market is a device that transfers wealth to the patient from the impatient, right? Something like that, which means you got to be patient. So when price breaks below or when price breaks out, what happens is FOMO, right? FOMO. So the market is a psychological machine, and you have fear, you have uncertainty, you have doubt, right? You have FOMO, you have fear of missing out, you have a lot of emotions. You have greed, you have fear, right? You have everything. So all those things come into play. And the most important thing is to not make a decision based off those emotions, but rather making a decision based off confirmation. So instead of emotion, look for confirmation. It doesn't matter how you feel about the market, right? If you're scrolling on Twitter or Facebook or Instagram or whatever, and you have a general feel that people are bearish, or you have a general feel that people are bullish, or you're watching YouTube videos and a lot of people are bullish or bearish or whatever, that can't be a deciding factor for what your decision is. Because oftentimes it goes against what the herd is going for, right? So for example, the herd went short when we broke this support area right here. When we broke that, retail went short. The reason why they went short is because we broke below support, right? But here's the problem. They didn't wait for confirmation. So, for example, when we're down in here, YouTube, Twitter, Instagram, everybody's saying what? Bear, 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 right? They're bearish. Why? Because we're sitting on support. And usually when you're on support, you should be actually kind of bullish because you're on support, right? If you're at resistance, then you should be actually kind of bearish until proven otherwise, right? Until proven otherwise. And how do you prove it? Well, and when retail looks at this, they say, okay, we break down. Okay, now it's confirmed. We broke below, right? So now I'm going to go short. But because not only I'm going to go short because we broke below support, but I'm going short because Twitter and Facebook and they're all bearish, right? Everybody's bearish. The sentiment is ugly. There's a lot of fear and FUD out there, and it makes me feel not good, right? When you buy crypto, this is just an off-topic thing, but when you buy crypto, it's not supposed to feel good, right? If you're buying crypto after a massive pump and you feel euphoric because it pumped and then you buy, that's usually not the way to do it. You want to buy crypto when you're not feeling good, when you're feeling scared, when you're feeling like, man, this thing is going to go down even further. That's when you should buy. Like, for example, like C19, when we had that massive dump or the FTX collapse, it didn't feel good because everything, the Congress and everybody was raining on crypto, saying it was this, it was bad, don't get into it. You know, CNBC and all the big players are basically raining on the crypto parade even further, right? Basically, they're kicking crypto while it's down. So crypto got knocked out, right? It knocked a couple teeth out. Crypto is laying on the floor, and then as it's laying on the floor, it's getting beat up as it's down, right? So it makes you, and you're watching crypto getting beat up, so you don't want any part of it. So, you know, instead of walking away, that's the time to put your hand out and pick them up, right? As he's getting kicked in the face, crypto's getting knocked down. That's technically the time when you should start considering dabbling a little bit. Not going all in, but dollar cost averaging, right? Dollar cost averaging. So going back to what I was saying, you want to wait for price to come down even further. So when price is down here, you're freaking out like, oh man, I should have shorted. No. Wait, let it come back up. Let the price come to you. That is another important part. Don't follow price. Let price come to you. And if it doesn't come, then it doesn't come, right? See, that's where it comes to fact if you're a trader or a hodler. So for me, if I'm a hodler, I'm going to be buying regardless of, you know, sort of what the price is doing at that time because you're a long-term investor. But if you're trading, you don't want to sell it down here. You want to wait until it gets up here. It confirms it, and then it comes down. So this would be your selling opportunity or your shorting opportunity. So right there, boom. So there you go. That's what they don't want you to know. So what happened was retail preemptively went short, which then liquidated them because what happened was price shot back up. So if you would have waited for this, it would have never came. Instead, price would have came up, it would have pulled back into this sort of, and you would have saw, right, I'll take everything off right here. At that point, you should have identified the YOFF accumulation. So you see this little range right in here. It's very tight range in there. So price breaks below, price comes back up and you say, well, wait a minute. Good thing I didn't go short, because if I went short on this candle, I would have got liquidated, because I would have had my stop loss right here, or even at right here, right? And I would have got liquidated, right? But instead, I waited. I waited for confirmation, and the confirmation never came, and that's okay. What happened was the price shot back up, it came back down, and it tested and back tested this as new support. So it broke resistance, didn't confirm it though. It broke up, it tested it as new support. Brilliant, brilliant. Now it comes. Now you're still not sure yet, right? You're still not sure. You're like, well, maybe it's just a fake out. What does price do? It comes all the way back up. It comes back down, and then what does it do? It holds another level. So here's the new level right in here. So you see these candles right in here. 1, 2, 3, this in here. So price breaks from this cluster of candles, comes up, runs into the moving averages, come back down, and look what happens. You see that candle right there? That's a doji candle. The doji candle is occurring right on the back test of this new area. That was your long opportunity right here. Right here. Right there. That was the long. So now you're long, and look at that. Look what happens after that. Right? I know this is all in hindsight, but that's how you learn. You have to learn it through hindsight. That's the only way it works, right? That's the only way it works, is to go back in time to understand how it went, so that you can, so when price continues its formation, then you can identify things like that. Okay, so now what? So now we have a new base, right? This is our base down in here. And what happened, right? We broke out, but we never back tested, right? So if you bought, and then that's why I'm saying not always it confirms, right? So for example, if you didn't buy here, so you could say, Brandon, it broke out, and if I didn't go long, I would have missed this whole move. But yes, you're right, and that's okay. That's okay. And you say, well, that's not okay. But if you're hodling, it's different. It's different, right? You wouldn't have bought here on the breakout if you're hodling. You would have bought down here when we're in fear. Like if you look at the fear and greed index, you want to buy when there's a lot of fear and when there's a lot of blood in the streets. Like if you're a hodler and you buy a breakout, it's kind of going against, what your strategy is about, right? Because a hodler should be buying capitulation. A hodler should be buying corrections. A hodler should not be buying big pumps that already pumped out and broke out. But if you're a trader, you want to buy when it breaks out, but also you want to wait for confirmation. So that's kind of where I'm getting at here. Okay. So is it too late? No, it's not. Because if you're a trader, yes, you could have bought here, and yes, you could have made money. But if you would have sold down here, you would have lost. So, but that's okay. Not every trade works out, right? That's why when you're trading, you want to use risk management. You want to use a proper strategy. And if the price doesn't do it, doesn't give you that confirmation, yet it still continues to rise and you missed it, that's okay. That's okay. You can't always catch all of them. You're, as a trader, as a hodler, it's different. It's different. So you break out, right? And what did I say? I said one of the ideas here is to wait for a pullback, A, B, C. Let it come down to test as new support. So this was resistance. This was resistance. We broke above the resistance. We want to come down and hold it as the new support. That's when you buy. That's when you buy. And then you go up. But you got to wait until it confirms, right? We can come down here and break below, right? So you want to see a reaction like I showed you here, right? So here was your reaction, right? It broke below, it came back up, it pulled back, it back tested it. That's your reaction. That was your confirmation. Then when it came back up again, it back tested this new level, and then there's a double confirmation, right? So then you're like, okay, now I'm going long, right? So just giving you these perceptive, from my perception, from when I was, if I can go back into 2017, when I first bought Bitcoin, when I first started learning about charts, and I can show myself all of this information, it would have been so valuable to me back then. I probably, maybe would have been a millionaire if I would have known everything I've known now, obviously, because anyone who knows, right? But not knowing where the price was going to go, but just knowing the basic instruments and the tools that you need, potentially being a millionaire. But being a millionaire is what we all dream of, right? Maybe you are a millionaire, right? But it's what we're really here for, right? Yes, we want to make money, but the real goal is to one day be a millionaire. That's what your goal should be, or at least live comfortably where you don't have to ever worry about money or anything like that. And for me, and probably for you too, the best vehicle is crypto. Why? Because it's so early. It's only a $1.3 trillion market cap in a land full of magnitudes more than that. I mean, just look at the bond market, look at the stock market, look at the monetary system, right? That's one reason I'm a big proponent of crypto, and specifically certain coins that have utility like XRP, and those facilitating liquidity for banks, right? And you say, well, a lot of people, it's very controversial, XRP, and I get it, and I was one of those guys. It's a banker coin, but who has all the money? The banks, right? So it's like, okay, it's common sense. It's the banker coin. Why would you want that? Well, yeah, but who has all the money? The banks. And what do they use it for? Payments. Payments is one of the biggest things in the monetary system, is transferring value, right? Think of it like the internet for information, but the internet of transferring information is transferring value, and that's what crypto is. Not just XRP, but all crypto, really, right? Okay, so enough of that rant. What now? What's happening at the moment? So let's zoom in a little bit here, and we're gonna go into the 2-hour chart. And what the heck is this? Well, this could be a trap. I don't know if it's a trap. I have no idea. I have no idea what's going on. But all I can do is just follow the basic principles that I know. And we're going to go through that right now. So here is resistance, that was your resistance, right? And what did price do? Price had a beautiful markup phase. It ran into resistance, right? Kind of creeped up a little higher, but still acting as resistance, came back down to support, right? I'm going to have support here so we can see 1 and 2, and I'm going to make these a dotted line so easier to see, right? Price runs up to resistance, come back to support, up to resistance, come back down to support, up to resistance, makes a higher low, not necessarily touching support. What does it do? It breaks out. What did I say in the previous video? Yes, we can continue going higher, but what's likely to happen is for us to pull back to back test this breakout area. And that is where the smart money says, okay, we back tested, we confirmed, now I'm going to buy, right? So a person could have bought here and would have had to deal with all of this. But instead of buying the breakout, it's good to wait for the breakout to happen. Let it go up. Let everybody get excited. Let the price go. Yes, it doesn't feel good, right? Because you feel like you're missing out. And it always feels like that. But just remember, price always comes back, right? The market always comes back in some fashion. So price comes up, breaks out, everybody gets happy. You feel kind of sad because you didn't buy it, but you're disciplined. Remember, you got to be disciplined. You're disciplined. You wait. Boom. You got the back test. Now everybody's bearish. Everybody doesn't feel good. But now you are excited. You are happy. Why? Because the price came back and now it's back testing exactly what you wanted. So you buy, price pumps to the upside. Now you're happy and they're sad. Why? Because they sold and you bought. And that's the way it goes. That's the way it goes, right? They bought up here, right? It broke out. They bought, right? You waited. It didn't feel good, but you waited. Then the price came down. And they're like, oh man, why is it going to go down? Because you bought it here. So now they're worrying. They're getting nervous. Why is it going down? No. Boom, liquidated. Why did I buy? Okay, I'm going to go short now because we broke below resistance. And then what do? You were disciplined. You waited this whole time. Then you bought. Then it shot to the upside. So basically, their liquidated position is now in your wallet. And that, my friends, is how you win. You got to be disciplined, right? So now what's happening? Well, so what next, right? What's going on now? Well, it's hard to say. You got to really wait for a confirmation. So here's our new area right in here, right? There's resistance, and going down a little further, here's some support, and here's some support there. So I'm going to take all this off. I'm going to leave that one there. Okay, so price is a little bit overextended. We got 1 hour to go on the 2-hour chart. We got a doji candle. So it looks a little exhausted to me at the moment. Plus, we just broke major resistance, right? So let me zoom in a little bit here. So what did price do? Here's our resistance, right? There's a big wick up there, and that's kind of confusing too, is about the wicks. Wicks are very important, but the bodies of the candles are more important. The bodies of the candles are confirmation. The wicks of the candle are tags, right? You tag it. You're tagging it, you pull back. So here's our resistance. Here's our resistance. Price, it went all the way from the bottom of the range, below the bottom of the range. It came all the way up, monster move. It broke resistance. So now you say, okay, I'm going to go long because it broke resistance. No. Look how far price came. Price went from all the way here, and it broke. Usually when price comes from the bottom of the range to the top of the range and it breaks the range, it's usually exhausted at that point. It needs to cool down. Of course, yes, it can continue pumping. Of course. But if it does pump, that's actually a good thing. We want it to pump. Well, you say, well, why would you want it to pump? I didn't buy in. Well, that's way we have to wait for resistance, remember? Or we have to wait for confirmation. So, for example, if the price came all the way up here, right? By the way, this reminds me of a spring phase, right? It comes all the way up. It breaks resistance. Great. Now you're sitting up here hovering above the resistance. So what I would like to see is price continue to pump just a little bit, pump up here, maybe 38K, get up here a little bit, and then come down and back test this old resistance as the new support. And this is where I would buy, right there. I would buy right there, right? If price continues going up, well, then whatever. It goes up. I missed it. Oh, well. That's why we hodl. That's why we have some stored away that we don't touch, right? So that's kind of how I'm playing this right now. I'm going to wait and see what happens. I would like to see the price go up a little higher and come down and back test and then continue higher. If it doesn't do that, then we're going to take everything off the screen and we're going to have to reevaluate what this could be, right? What is that? What could this be? Well, it really looks kind of like the fractal from back in the day that Blockchain Backer, his YouTube channel, has showed it many times. Let me see if I can find it real quick. Okay, so here's the fractal, right? This is what happened back in the day. So basically what happened was it's the same kind of thing right now. See this little box in here? Same thing in here, right? So basically what happened was the price broke out, it came down to backtest a little bit, and then it marched higher. And what's happening now? Well, this is an older chart, so it doesn't have all the data on it, but basically the price came down and now it's starting to trend higher. So let's see, let me zoom in here. Let's see if we can continue, we got the pullback, we got the back test, and we got the reaction. Let's see if we get a little bit of follow through. And then after the follow through, let's see if we get some confirmation. And then let's see if we can get some more follow through after that confirmation. So we want to see basically continuation. So basically that's it in a nutshell. So if this starts to lose support, so basically what could happen too is this could be like, sort of a, I know the Elliott wave guys were suggesting this could be one more high before coming back lower, right? And that would mean that we could finally come back here to backtest the breakout area. So going back to the zoomed out, right? The daily chart, we come up. So you see this candle here. We have an engulfing candle, but it looks a little funny to me because it doesn't look like enough time has elapsed for that reaction to take place. So what I mean by that is usually when you have a pullback, you want it to kind of flatten out a little bit before going higher. So basically what it did was it came up and it instantly went higher. And usually that's not sustained and it sort of comes back down. But let's see. Hopefully that's wrong and we keep going higher. So at the moment, it looks bullish. It looks really bullish. It looks like it still can have some momentum to the upside. But on the shorter time frame, maybe some consolidation, maybe a little pullback, and then continue higher. Going back to that fractal I showed, basically it suggested that, this was a little channel in here, right? There's your channel. It was actually right there. And then it breaks out of the channel. It comes down to back test it, and then it sort of continues marching to the upside. So let's see if that's the case. If it's not the case, and we start breaking to the downside, then what we can see here, right, is just an A, B, C. Let's come down to 30 or 31K. Boom, boom, boom. So we broke out, we come down, we back test, and then we continue higher. And that's where you would buy, right? That's where you would buy. So it takes a lot of patience. It takes a lot of days. It takes a lot of weeks, even months. But hey, price eventually comes back. And if it doesn't, then that's why you hodl, right? That's why you hodl. So basically that's it. I can touch on a couple things real quick. I mean, it's the same thing for Theta. It's the same thing for XRP. Bitcoin, you want Bitcoin to be the first mover. So if Bitcoin pumps up and the rest doesn't, that's okay. Even though the rest are right now, is this just remember the last couple of days we had a massive pullback. We were down like 8%, 5%, 10%. So is this a retracement of that pullback, or is this another continuation? That's what we have to wait and see. So looking at Theta real fast, To me, it doesn't look done yet. It doesn't look finished. So I could be wrong, and I hope I am wrong. But when you have this big pump right here, boom, and then you have this massive rejection wick, you oftentimes want the price to come down, which it did, and then you want the price to come back up, which it's doing, but then you want the price to come back down in an ABC. So A, B, C. And then retest maybe this area down here, maybe that mid 70 cent area right in here. Backtest that area and then continue higher. Because it doesn't look like enough time has elapsed. For example, if I draw it here, and I know I didn't spend a lot of time on Theta as much as I did Bitcoin, but it's basically the same thing applies. It's the same thing, right? So here's your little zone right in here, right? So price moves up, it quickly gets rejected, it shoots down, and then it's going to continue up. But that thing was not a little pullback. Look at the size of the pullback compared to the wave itself. Unless we're still in the fifth wave, then yes, we could have another hit to the high, and that's true. But if we do, right, I say I'm the kind of guy who says let's just rip the Band-Aid off and get it over with. So for example, if this continues to march higher, then I would look at that as 1, 2, 3, 4, 5, and now we need A, B, C, and to go higher. Maybe the C comes down in here somewhere, right? That's what I would look at, right? Or let's say the fifth wave is finished and we're already in the ABC, which is what I would prefer. That way we can get on with the bigger wave, right? So for example, we could see A, B, C, and we come down, we backtest this area, and then we continue higher. I don't know how far this C wave is going to go. There's different Fibonacci tools you can use, but let's just wait and see what this wave does. If we break out, great, let's go. If we stall out here and we pull back, it's still fine. It's not a big deal. We're just having an ABC. So zooming out, like I said before, if I go to the 3-day chart, I was saying, I had the green path, the purple path, and the red path. I shared that picture on X, right? And basically I was saying, look, we can either continue marching higher, hold this as support, and go, which would be extremely bullish and very possible. Or we can come up maybe a little higher. Maybe we get that fifth wave to the upside. We hit this resistance area. We get rejected. We come back down 50% of this wave, and then we come back up. And that would be a beautiful, beautiful thing. Why? Because that would be an inverse head and shoulder. So there's your shoulder, there's your head, and then there's your right shoulder. And that, to me, would be a completed bottoming structure. So we have that impulse. So this was our spring. We grabbed the liquidity. We had that sharp impulse. But an impulse doesn't go up, up, up forever and ever. It could, but it's not likely, right? We could have another hit to the high, maybe $1.30, between $1.20 and $1.30, maybe. Or we could start pulling back now, creating this left shoulder. Let's get it over with. And then break out, backtest, and then continue higher. So we are still golden. And then when you zoom out, it looks like a perfect bottoming structure. It looks like a perfect bottoming structure. You have your inverse head and shoulders coming up to resistance, right? So we are on track. We are totally on track. So let's see what happens. I can briefly touch on XRP real quick. Here's XRP. So same thing here. I would think, okay, we have two options. Number one, Let me zoom in a little bit. This was 1, 2. Now we're in 3. This is 4. Then we're going to get 5. And hopefully 5th can break this resistance. We come up here, we break the resistance. Right? We break the resistance. We come down, we back test, and then we continue higher. That's option number 1. Option number 2 is we pull back A, B, C. We come down here, we back test this 55, 56 cent area, and then we continue to go, right? We continue to go. And that would correlate with Theta and Bitcoin and all the rest, right? What we don't want to see at all is this to be broken. If that gets broke, then man, that would be devastating, because look at all of this support here, right? This was all resistance, right? And this big pump right here was the Judge Torres ruling, and it was sort of like an anomaly in a way. I'm treating this whole move that was down, right, as a spring phase. And then in the spring phase, in the sub counts, you also have a YOFF accumulation pattern down here. So let's see if we get another hit to the high, go up to resistance. What also can happen too, you come up here, right, and then you pull back into ABC, right, and then you break out. So it doesn't have to break out on the first chance. So real quick, I'll just run it real quick again. Number 1, 1, 2, 3, 4, 5, A, B, C, go, back test, go. That's option number 1. Option number 2, we had our pump, A, B, C. We back test this support, the old resistance as the new support. We back test it, and then we go higher. That's option number 2. Option number 3, we have 1, 2, 3, 4, 5. We break resistance, we hold it as support, and then we continue marching higher. So there you go. So zooming in a little bit, I was suggesting here that this could be a diagonal. So you have 1, 2, 3, 4, 5, right? So now you have A, B, C, 1, 2, 3, 4, 5. We come down, we back test, and then we continue higher. That's definitely a possibility. So let's see what happens. I don't know. The short term is very hard to predict. That's why we wait for confirmation. I hope this video helped you. I hope this video gave you a little bit of insights. We are still macro bullish. So that's the thing, right? If I say we're bullish, you know, the thing is, it's very hard to be a technical analyst that shows their charts and things. Because if you look on Twitter, they get totally destroyed, right? I mean, if they say, hey, we're going to get a breakout tomorrow and it doesn't come, then, you know, they get pretty beaten on. That's why I don't do that. I don't make any promises to anybody. I'm not making predictions. I'm not making promises. I'm just giving you different ideas and different probabilities, because I don't know the answer. And people who are on Twitter claiming they know the exact day and the exact answer, oftentimes they're just doing it for attention. And then when it doesn't happen, they basically shoot themselves in the foot, right? So, I mean, maybe you have a couple people out there that can say, hey, we're going to break out and it's going to be probably in the next week, and then it happens, and, you know, you call for stuff. And I do as well. Like, I am calling for us to break out. I just don't know how it's going to do it, right? Are we going to back test first and then go? Or are we going to ABC then go? Or are we going to have this fourth wave finish up and then go? Not sure. We just have to wait and see. But anyways, I hope you guys enjoyed this video. If you can, leave a like, leave a comment. If you have any other coins you want me to check out, let me know, and I might do a some charts for you. So let me know as well in the comments. Are you bullish? Are you bearish? Where do you stand on this whole thing? But until next time, have a great day. I'll see you later.